trading stocks after a big price action movement, in other words, a gap down or a gap up, is not something that we recommend at all. But in this video, I am going to share with you a gap down situation, and I'm going to talk a little bit about how long it takes for the equilibrium of the sensitive indicators to get back to normal. And I am going to talk about signals that occur after a gap and how we read them. All right, now this particular stock that we have is CERS. It's a less than a $5 stock. It started out over $4 and it gapped down to looks like about $2.80 the next day, and then came back up. And so even if it only gapped down, even if it only went down $1 totally, you got like a 25% drop in a stock in one day, and that is significant. And this vertical pink line is drawn in 2 days after the gap down, and it is also the day when we have a key signal, and that signal is right here in the price chart where price green is under price red, and that is extremely significant because green hardly ever goes below red, and it will occasionally go below zero as well for several days when you have a lot of pressure in a real strong downtrend. Now, that being said, with this day being an excellent uptrend day or next day up signal in the power green lines, we also over here on the same day in the trend chart have a BOC bottom. However, what we have is we have all seven short-term trend lines, the trend trio, yellow, pink, blue going down, power orange and green going down, and of course it's harder to see over here, but red and green are also going down in the swing chart. Those are our three groups of our 7 short-term trend lines. When everything's going down with those, you can obviously reach a point at the bottom when things turn around, but with trend red turning around, that is the other signal. But it's a low-sided BOC pattern. In other words, the right V is lower than the left V in length and height, and so we can which is basically both the same idea, but the length or the height of it is less than the height of the left leg, and that tells us that we are in a weak start right there. We also have power pink in a bottom of in a lowest position. It looks like it or appears like it's going to be in the bottom. You remember, you got 3 red candles, the gap candle in 2 more days. A lot of things run in threes. Maybe you're thinking, hey, here's a good chance for it to go up. But again, if you even forget the idea of not trading after the gap down, you definitely see the weak signal. You definitely see that you could be on a cycle, but you can't help but see the 3 groups of the short-term trend lines that are all going down. So it's a question mark. Now, next day it does gap up a little, and in fact, I'm going to add another vertical line here, and that vertical line I'm going to put right over here, and I will change that to a green color. On this, from the pink line to the green line, price has been real stagnant, and even looks to be downtrend a little. That that stagnation is not what the trend red and green say. When red is above green, you are in an uptrend. And in fact, the trend trio lines are turning around. But right here, this day right here, power yellow turns back down. And you want the power 4, power pink, blue, white, and yellow to be going up. Because this sideways movement of the power yellow line is just a classic example of stagnation or eventual of a downtrend. Simply because it's a key indicator in its own right of several things. But keep in mind the power indicators. Your power red is your number one location indicator. When it is under 0, prices have a tendency to go down. When it is over 0, prices have a tendency to go up. That is true with all of the power indicator lines. And you just have a situation here that's just, when you look at the trend chart, you say it's going up, but when you look at the power chart, because of where yellow is going, you know it's not going up. And obviously in the middle between the red and the green, at some point the trio starts turning up. Now, you've heard me tell you, hopefully in previous videos, that the trend trio, yellow, pink, blue, is the first group of the 3 short-term trend line groups to go up. It's faster than the others. Swing red and green are probably the slowest. But the point I want to move on here, because this day, the pink line day, it had a few signals that said, hey, this thing could be moving up. Even if you forgot what the other things were saying, you definitely should not have missed the signal when you have all 7 lines going down and you're contemplating a buy long position. You need some, that will happen, but only when the trend chart has down touches, because those are the down touches, the proximity group, the power 4, and the identical indicators are the 3 pattern groups that form gap patterns. I'm not going to get into that right now, but going on here on day 2, if you thought, well, I'll look at what I got here. This isn't a signal, and why isn't it a signal? The power, or the pink vertical line, is in a pink-green bottom pattern, and the pink-green bottom pattern with keep in mind, zip pink is at 0.41, but red is under it. And remember the rule for the pink-green bottom: you have zip green at 0 and pink red, and zip pink is next to it. And in this case here, the red is below it, so it's a hold off. You do not have a signal under the pink-green bottom rules. And so you move on to the next day. I'll move this line over 1. On this day right here, we again have a good indication that things are moving, because your zip yellow, red, blue, and pink are all up. But zip Zion and zip green are not up. Zip green tracks buyers in and out of the market. Zip Zion is the grandfather of zip green, and it tracks buyers in and out of the market. It takes a lot of power it takes a lot of power to push zip Zion to 0 and to keep it there. This now is the 3rd day that zip Zion is at 0. And so with that in mind, you also see zip red that has gone up to 40. Now that your first reaction may be, well, that's great. Well, actually, that's not great, because Zip Red and Swing Pink are your two fastest lines in the system. Sometimes one moves a little faster than the other. Depends on what's going on. But the thing, and both of those are leading indicators. All the other zip lines are real fast as well. But as you know, when Zip Yellow is down and under 20 and moving along, price is going down. You're in a downtrend. When it's high and above 80 and bouncing back and forth but stays above 80, you're in an uptrend. And so you can obviously see here, I mean, I'm on the pink line right now, thinking about, do we have a situation where things are moving? The next day on this day right here, because Zip Red only went up to 40, and with Zip Yellow low, with Green and Zion still at 0, you don't have a good answer as to whether or not you have a signal. Now immediately, this pink line here closed today at $3.21. The next morning it opened. Oops, I gotta move this here a little bit. It opened at $3.20, so it actually went down a penny in its open. Now that is one of the very first signals for a downtrend. When the open is lower than the previous close, it's a signal. It's not the signal, but it's an identification point that says we don't have any strength in this upward movement, because we're contemplating, it's been down low, it's been dropping for 8-9 days, whatever it is at this point, and we're, at some point it should take off, right? And so that's what we're looking at. We're trying to analyze this and see where we're at. But at this point here on this day, we have a Zip Red in a low angle up, which is a indication of next day down. We also have a huge indicator, and this is a high M pattern in the Zip Red underneath 50. That's worth 2-3 days of potential down movement at least. And so on this pink line day, we have that high M pattern in Zip Red under 50, and we have the low angle up in Zip Red, which definitely tells us that things are going down. Yesterday we had Zip Yellow from when Zip Red did a low angle up today, Zip Yellow did a low angle down. And that's not the way to go with Zip Yellow. So again, line after line after line, and when you look at these things closely, you can see that this thing is not ready to go up. Even though on today, this pink vertical line today has Zip Zion lowest. And when Zip Zion is lowest, well, things have a tendency to go up. Now the rule, of course, is Zip Zion must be lowest and go up. And if you look at this a little closer, you can see that the following day Zip Zion goes down here. The next day it's real flat, and then when it does go up, you get a little bit larger green candle. But again, all of these candles for the last few days have been pretty tiny. And so we see some things here that just continually tell us. I mean, we're out to this point right here, and right now Zip Red is at 29, and that's the highest line we have on this day. And we also can see that price red is still above price green, even though it's gone down the third day. On this white vertical line, price red is still above green, which is If you've heard me other videos about price red, I think there was a reading price red, a video about how red peaks were in relation to green peaks in the price chart. But that's a situation that I wanted to convey about differences in how particular lines look after a gap, because it really is. I mean, think of it. When it drops 25 or 35% of its value in one day, there's something huge that happened to that stock, and you really want to scratch your head about thinking that it's going to go back up. Not to say that it can't, but the signals need to be there.